Hey traders, you're welcome back to the Forex Geek channel. In this video, we are just going to simplify one of the most powerful trading concepts out there, and that is supply and demand trading. Okay, and we're just going to be breaking it down in just 10 minutes. So if you have been struggling to find high probability setups or improve your entries and exits, this is the perfect place to start. Make sure you hit the like button, subscribe to the channel, and stick around to the end because this is going to be a game changer. Let us just begin with the basics. So what is supply and demand in trading? Supply zones represent areas where sellers outnumber buyers. In simple terms, that is what we refer to as a supply zone. All right. On the other hand, demand zones are areas where buyers outweigh or overpower sellers, pushing the price higher. So for example, we can see that we have an obvious supply zone here, right? Where we had sellers outnumbering buyers, and we can see that we had a demand zone right around here. All right. So think of these zones as battlefields where buyers and sellers fight for control of the market. Understanding these areas helps you predict where price is likely to reverse or consolidate. Okay. Now, a supply zone often forms after a strong bearish move. All right. A supply zone often forms after a strong bullish move. Okay, because right after the bullish move, for example, we can see what happened here. We can see how we had a significant bullish move, especially around here. We had quite a strong bullish move. Okay, so right after the bullish move, we can see that we had a supply zone. We had sellers dominating this zone. And because of the prevalence of sellers, that is the reason why they were able to push the price down significantly. Okay. Now, in this other context, we can see that a demand zone forms after a strong bearish move. You can see right after this bearish move formed, we can see that we had a demand zone around here where the buyers outweighed or outnumbered the sellers. Okay. And because of that, you can see that the zones are usually at the bottom of a downtrend. All right. They are usually at the bottom of a downtrend or near a strong support level. Now, the key is to look for areas on the chart where price reversed sharply. Okay. These are your potential supply or demand zones. Now, how do you identify supply and demand zones on a chart? Okay, so here's how to spot these zones on your price chart easily. The first thing for you to do is to look for consolidation or indecision areas. Okay, now these are small ranges where price paused before making a strong move up or down. And we can see such thing happen around here, right? You can see that before we had a strong move downwards, you can see that we had a brief consolidation. We had a brief pause, right, before the strong move happened to the downside, okay? And now in this case, we can see that before we had the strong move to the upside, although we are still having current, price activity, we can see that we actually had, a wide consolidation, although this one is kind of a wide consolidation, this whole area, right? This whole area, you can see that we had quite a wide consolidation around this zone. before we had a breakout to the upside, and now probably a retest around this zone. Okay, but the buyers are dominating this zone. That is the reason why we refer to it as a demand zone. Now, you should also mark the range of the candle bodies and wicks. So the top of the range marks the supply zone, just like I identified here. All right, while the bottom marks the demand zone. Okay, so basically, in some cases, you might find an area where there was just mostly a supply zone. You might also find an area where there was just mostly a demand zone. And in some other cases, you might find an area where we had significant supply and demand zone within the same space. That is areas where we have significant consolidations. I'm just trying to find a good one real quick. Okay, we have areas where we have a significant consolidations, usually within a wide range. For example, here we can see we have a supply zone here, and we have a demand zone here. You can see within the same area, right? We have supply zone, we have demand zone. Okay, because we had a significant consolidation, a wide range within this zone. Okay, so when you want to trade these zones, you have to wait for the price to return to these levels. So when price visits these zones, then it's often a high probability entry point. For example, if you want to sell, you can just wait for the price to get into the supply zone before selling. Or if you want to buy, you can wait for the price to get into the demand zone before buying. Okay, now once you have identified these zones, here is how to use them. As for entering your trades, when the price touches the supply or the demand zone, you should look for confirmation signals like candlestick patterns or momentum shifts to take your trade. All right, now after you have done that, the next thing for you to do is to set your stop loss. Okay, you can just place your stop loss outside the zone. If it is demand zone, just below the zone. If it is supply zone, just above the zone. Okay, and then for your take profit, you can look for the next supply or demand zones as your potential target. If you're trading within the range, all right, if you just enter a sell around the supply, you can set your take profit at the demand. So if you enter around the demand, you can say you take profit at the supply. But if it's a situation where the demand and supply zones are not exactly around the same space, just like the one that we have around here, where this is just mostly a supply zone and not necessarily a demand zone, yeah, you can just look for significant support levels, because at this point you can see that we only had we had two touches though. Then we had a breakout, and before you know it, we had the price going back up and all. So in this case, if you had entered a sell here, you can just look for the nearest support zone and use for your take profit, or you can use indicators. You can actually use indicators as well. All right, now remember that patience is key. Okay, let us remember that in addition to having understanding of technical analysis, you have to learn how to observe patience, all right, for long-term success. So let the price come to your zone and confirm the move before you jump in. Okay, now here are a couple of tips to keep in mind when trading supply and demand zones. The first is, the stronger the move away from a zone, the more significant that zone is likely to be. Okay, so if you have a strong move away from a zone, the more significant that zone is likely to be. And then secondly, zones that haven't been retested are often more reliable than ones that have been tapped multiple times. Okay, because when you have multiple tests, it is possible that we could have a breakout anytime, right? Okay, so keep that in mind. Now, by understanding supply and demand, you can gain a better edge in identifying key turning points in the market and make more informed decisions. All right, so that is it. Now you know how to learn supply and demand trading in just 10 minutes. If you found this video helpful, hit the like button and subscribe to the channel for more straightforward trading tips and strategies. And don't forget to turn on the notification bell so you never miss an update. Also, let me know in the comments, what is your favorite strategy for identifying key levels in the market? I'd love to hear your thoughts. Thank you for watching, and I will see you in the next video.